What's up, traders? I missed you guys, man, and gals. It's been about 22, maybe 23 days since we last talked, depending on when you watch this video. Yeah, you might be wondering, Hotshot, where you been? I just been focused, bro. I just been focused on my model. What's your model? The optimal trade entry. ICT's optimal trade entry is my model. Okay. I threw out Silver Bullet. I threw out that 2022 model. I threw out order blocks, fair value gaps, market maker, sell model, buy model, breaker blocks, mitigation blocks, propulsion blocks, you name it. I got rid of it. I'm over it. I feel like I've mastered the Fibonacci and how to anchor it to the correct swing points. I truly believe that I got this in the bag now. Um, I've actually been taking my Forex funds. I just did the $5,000 challenge for 50 bucks, you guys. I'm not trying to throw $500 for a 100K account. Definitely not trying to do that. I still work a regular job, you guys. I got bills. I got a family I got to support. But believe that we're going to get funded and believe that we're going to upscale to 100,000, upscale to 200,000, upscale to 400,000, repeat the process, upscale to 800,000 to one day 1.2 million. That's my goal. I want to be funded over $1 million. Okay. I don't know if any of you have goals like that, but those are my goals. If I could get funded this 5Gs and then I can make 10% on it, then I'm able to afford a bigger account, 10K, 25K, 50K even, you know. And at that point, I just continue to upscale. And it all started with 50 bucks. I'm sure you guys seen these videos on YouTube. They're not bad. They're good videos, you know. They got good plans. So I'm very sorry. I got a basset hound. That's one of my boys, you know. So you could hear him in the background just howling. He's a crazy dog. Anyways, this is the account details for my Forex funds, my current challenge right now. I'm in the phase one. I am currently up about right now I'm up 2.90% is what this is showing, nearly 3%. My win rate right now is 62.50%. My average return per trade is $9.14. My most traded instrument is Euro JPY. I want to show you a trade that I caught recently on USD JPY. So if you know the setup, if you don't know the setup, if you go to youtube.com/inner circle hotshot, boom, enter. Oh, look at this page isn't available because YouTube don't like me. Bro, if you just go to YouTube, right? And then if you go to my channel, you just type in inner circle hotshot. Look at all this. Inner circle hotshot. Look me up. If you go to videos, or even better, if you go to playlist, there's this hotshot ICT recognition series. Okay. And start with volume one. It's 56 minutes long. And then these videos follow. They're not as long. But this video is a long one because it has to give you the framework. It has to provide you the foundation so you know exactly what we're looking for, why we're looking for it, and what, when and where we enter, So go and watch this series. It's in my playlist on my channel. It's public. Go check it out. Okay. Now, USD JPY, this is what I caught this week. If you know the strategy, if you know the setup, then we'd be looking for, buys. Long term, we'd be looking for buys. If I deleted everything, started from the monthly, okay. Why the monthly? Because honestly, there's this video on YouTube. If you go look up on YouTube, ICT order flow. There's this one video he has, it's like 56 minutes long. But watch, I'll even look it up for you guys right here. ICT order flow. It's this video right here, ICT mentorship core content month 3. This video right here is so good, you guys. Go check it out. This video actually breaks down from the monthly all the way to a lower time frame, and it makes sense because it actually gives you a legit direction. Okay, because the way that I apply it, like I said, I threw out everything. I'm only using the Fibonacci. I truly believe that the market expands and retraces, expands and retraces, expands, retraces. Sometimes it could consolidate, whatever. Maybe it'll even reverse and then retrace, expand. That's how the markets move, you guys. If you know that, if you could visually see that, all you need is a Fibonacci just to frame it. You know, that's all I use a Fibonacci for, is just a framework. I don't really depend on it. However, I use the levels to it to frame the whole framework. You know what I mean? It's kind of hard to, anchor the Fibonacci to the correct swing points, but I understand it at this point. Okay, so this is what I understand. You're gonna look for the most current 3 candle swing low wick, 3 candle swing high wick. See what I mean? What's that? Well, if you look at here, see how this wick was higher than the candle to the left of it and the candle to the right of it. See how this wick is higher than this wick and this wick. That makes this a swing high point. Same down here. See how this candle was lower than this wick and this wick. See that? It's a 3 candle swing low, right? You want to follow these, you guys. These are like the footprints in the charts. Literally, these are like the footprints. These really allow me to know what price is doing, where it's going, and where I should, attach my Fibonacci points to. So like example, you want to see the expansion, you want to attach from the swing low to the swing high, right? Those going down, you would attach from the swing high to the swing low. So your Fibonacci right here, you could attach it from here to here, right? But if you notice, it got ran out. At this point, I would consider that a stop run. What would I do in this situation? I would re-anchor the point A of fib. This is the point A, the 1 level. The point B is the 0 level. I would re-anchor the point A of the fib to a more logical 3 candle swing wick low, the very next one. So if we're looking back down here, where's the very next one? If you look at this green candle right here, look it up here where it says the L. Okay, this green candle's L, the low is 112.560. The candle right to the left of it is 112.533. 560.533. So 60533. So actually it looks like that candle is actually lower than this one. So it's not that one. It's this one right here. This is the very next 3 candle buy, because if you notice, see how the wick is lower than the one to the left and the one to the right. This is the most valid one. That's logical, right? So now we're just going to grab our Fibonacci, re-anchor it to that logical one. Boom. And now we can anticipate, well, price came down to equilibrium and it can possibly start going up. As you see, monthly is taking out the previous candle's highs, right? And that's showing expansion to the upside, okay? If they're taking out the lows, that's expanding to the downside. As soon as it flips and they start taking out the highs, you can start anticipating bullishness, okay? That's a little hack, right? So now if we're anticipating bullishness based off the monthly, we go to the weekly, same thing. It just this week took out last week's high and the previous week's high, okay? And it's continuing up still. So same thing, if you were to attach your Fibonacci on the most current swing lows and highs, where this is the most current swing low, this is the most current swing high right here. And then you just drag it up to the most current right here. This is the most current swing high. It broke out. So now with your point B of fibs, if it makes another swing high before retracing, you just drag it up to the next one. So as of right now, it's making new highs, and we're waiting for it to re-anchor our weekly fib on, so we could possibly start seeing a weekly retracement. And long term, we'll start seeing some weekly retracement with a monthly bullish like outcome, So now we drop down to our daily, knowing that the weekly is bullish. What can we anticipate for the daily? The daily might be bullish too, until we see the daily flip, break structure, market structure shift, whatnot. then we could start anticipating lower prices on the daily. And at that point, we could start anticipating the weekly to start retracing into this bigger range. Okay. So right now, daily just took out all this liquidity right here. It's still expanding to the upside. So in this situation, we can anticipate more bulls coming into the market. So if we attach our most current 3 candle swing low, you can see that it hasn't made the 3 candle swing high quite yet. So right now, we're still waiting for, this current coming up weeks, because today is Saturday, next week's candles, the daily close, it'll likely create a swing high point where we can anchor this fib. And of course, the weekly fib won't get anchored until we create like a swing high on the weekly time frame. That takes a whole week for it to close. So on the daily, we can wait for that, potentially see a daily retracement to the downside. If we go to the 4 hour, you'll notice that on the 4 hour, this is another hack for you guys right here. If the daily is taking out the previous day's candle, or if you anticipate it to, if you go to the 4 hour, you'll see that the 4 hour is actually really clean with those expansions, retracement. So you know where you're at within the range. So you know where you're targeting, you know what I mean? If your 4 hour looks like this, where it's expanding, retracing, and you know on the weekly that you're looking for bulls, if you know on the daily that is potentially going to be bullish and you're targeting the previous day's high, all of this confluence building up together just forms like a really solid setup for you whenever you drop to the 5 minute. So it's awesome. Right here, you notice if I just delete these previous day's highs that I just drew on there, you notice if you attach the fib on the 4 hour, you see right here from this low up to that current swing high, boom, what it retraced into, optimal trade entry, there's a buy. You just redrag your fibs to the next 3 candle swing wick low, boom, to the current 3 candle swing wick high. What did it retrace into? Optimal trade entry, 0.705 level, took off. Now what can we anticipate? We can anticipate attaching this right here. Then the next 3 candle wick swing high, it was right here, but you could see that price ended up expanding more. So now it just created this right here. So the next 4 hour candle, if it creates a lower wick, that's the high. We can anticipate a retracement to potentially expand higher again. Okay, so now that we got all this in mind, we're looking for bulls, right? We're looking for buys here on USD JPY. It's very obvious, it's very clear. We dropped to the 5 minute, right? This was Friday's trade that I caught. So right here, if we look at 8:30 to 11, that's the time frames that we trade the optimal trade entry at. 8:30 to 11, specifically on the 5 minute, okay? If we look at 4 hour, where it was at within that range, 4 hour was expanding, right? 4 hour was expanding whenever we got to 8:30 to 11 o'clock time frames. So whenever we got to that window, we seen that 4 hour was expanding. Daily is bullish, weekly is bullish, monthly is bullish. What are we looking for? Bulls. Why would you look for a sell setup here? Don't make no sense. If you look right here, right at 8:30, I set my alarm for 8:29 a.m. even. I checked the night before the news. I checked the night before my setup. I knew what I was looking for going into this next day, the night before I went to bed. So when I set my alarm at 8:29 a.m. New York Standard Time, okay, I woke up 8:29 a.m. and I seen price was retracing. What was it retracing into? If you frame this optimal trade entry right before 8:30, you can see that right here, this was a candle I woke up to. You can see it was retracing. What did I do? I set a buy limit order right here. Boom. I put my stop loss right here at the 0 level. Boom. And I targeted a 1.5 R right there. Boom. And price, as soon as that 8:30 candle opened, tapped right into it, took off. That was my setup on Friday, and you can see it right here. I risked 1% on the $5,000 account. That was $50 that I risked, and you can see here, it hit about 75 bucks. That's if it would have hit 100, that's a 1 to 2 R. Since it hit 75 bucks, well, $73 as you see here, that's about a 1 to 5 R. Right? Hell no, that's not. Wait, yeah, it is. No, I'm just kidding. Yeah, it is. Yeah. So that is that. I caught that setup there, okay? You can see here on Euro JPY, I caught a 1 to 2 R on Euro JPY. I'll show you that one as well really, really quick. I don't want to break it down like crazy like I just did, but I was also looking for bulls here. You can see that it's been expanding I was using order blocks for a little while trying to understand it. But then I realized the other day, like, bro, this shit really, order blocks are not necessary, but I just left them on my chart so that way it can just be a little bit of a little framework for myself, you know, framing it up based off the previous liquidity. I caught this setup this week, and then I also caught this setup right here. So if you notice what happened right here, if we do our 830 to 11, boom, you'll see here that price expanded. I framed it off of this 3 candle wick to this 3 candle high. Okay. As soon as 830 opened, it was already within the retracement, within our optimal trade entry. So I took a manual buy. I manually bought right here. Okay. Didn't I? Wait, what was my buy? My buy open time. Does it say open level? It doesn't say my level. Bummer. I wish it would have said like the entry price that I took it as so I could re-anchor it. But I took it right there. My stop loss was right here. And I actually got out at like a 1 to 2 R right here. Okay. As you can see, it came up for like a 1 to 3 R. But I claimed my profits at a 1 to 2 and I made $100 on that. So that put me up nearly 3% on the account. I was actually down on the account. Well, I was at break even. I caught a 2% loss the other day on Euro JPY, and it was stupid because I got stopped out by spread. But one thing about it, if you're calculating your stop loss, make sure you incorporate spread so that way you don't get stopped out on some bullshit. And then another thing too, once you enter a trade and you have your stop loss set and your take profit, dude, leave it alone. You might be seeing it go into profit and your brain might play these mind games with you like, man, what if it turns around right now, go straight for my stop loss, man, well, that would suck. You know, I see some profit right now. I just want to close it, even though you're not even up a 1 to 1 R. Hold it, bro. If you have these rules set for your model, hold it. If your model says hold for 1 to 2 R, you hold it, bro. If you set that trade, you follow your rules. You don't allow your mind to play those emotional trick games to psych you out of your setup. Because then if it does hit your target, if it does hit that and you claim early, you're gonna be kicking yourself in the butt, dude. You're gonna be like, dang, bro, I should have held. I should have got that, but don't close, you guys. You guys set it, forget it, let it run, you know? And another thing too, ICT teaches with this strategy that you want to claim partials here, partials here, partials here, partials here. He teaches you to pay the trader. And that's great and everything for your confidence. But if you have a really solid like model like this one right here, you can hold for those 1 to 2 R's. You can hold for those 1 to 3 R's and be cool. You know what I mean? I really do believe that holding for those 3 R's, 2 R's, even a 1 to 1.5 R, like even if you hold for those instead of claiming partials at every level, because think about it, if you claim 1% right here, like let's say you risk 1% and you claim half of that 1% here, now you got 0.5% running. Right here, it's a 1 to 2 R, 1 to 3 R, whatever. But you're only up 1% because you only got half a percent running. You claim half a percent there. So now you only got like 0.25% running. Right here, let's say it's a 1 to 4 R. You only got 1 to 2, you only got a quarter of a percent running. That's 1% on a 1 to 4 R. That sucks because that could have been a 4% gain. You know, long term, I really do believe that holding for higher R's are way better than claiming partials. And like I said, you may lose more, but if your model is sick, you'll long term you'll be profitable. Okay, just stick to your model, stick to your rules. Don't allow your mind to play these little emotional games on you. It's simple, you guys. It's simple. Stick to rules. If you take a trade and you notice like during that trade you experience emotions, write them down so that way you know exactly what to kind of get away from, steer away from the next time you take a trade. You're like, well, last time I felt this way. This time I'm not going to allow it to affect me like this. So make sure you take notes while you're in trades. Take notes, what you're feeling, what you're experiencing, what you're seeing. So that way you can try to deviate from that in the future. Okay. If you guys learned something new here, I hope you guys got a little bit of value. If you stood till the end, make sure you drop a like, please. I appreciate it so much. Drop a comment for more videos in the future. And until next time, you guys, thank you for watching. If you aren't subscribed, hopefully we earn that subscription. Take care of yourselves. Later.